we are live. Welcome back to the PYRESWAP show for another exciting Market Monday. And if I could get some sort of confirmation that we have audibility across the chats that are now in fact fantastic. That's fantastic news. And of course, welcome to everybody tuning in on Twitch and Twitter and YouTube and Kick. And by the way, guys, as of yesterday, we were running some tests. It is possible that now these are automatically getting posted to the PYRESWAP subreddit. So we ran it yesterday. We did a few live tests and was with YouTube, and they are now possibly getting automatically posted to the PYRESWAP subreddit. If not as early as today, we need to take the script. We need to take the script, and then we're gonna upload it to the AWS server. We have the AWS server. Fantastic, Trigger. I appreciate it. And then once we have the script running on Amazon Web Services, we should have the PYRESWAP subreddit effectively being a perfect archive of the PYRESWAP show, which I think is a great use case for it, if that makes sense. So yeah, all of the lives, it'll be easy. It'll be easier to find our lives on our subreddit, more so even more so than our YouTube, because our YouTube is gonna have a whole bunch of other stuff all over the place. But yeah, our subreddit will at least have this automatic feed of the PYRESWAP show getting posted, 4 times a week, what have you. And then of course, that allows everybody who uses Reddit to also comment on the PYRESWAP show, etc., etc. So I think it's just a really great usage of our subreddit. It shows that our Reddit is alive, and we've been looking at other crypto subreddits a lot, and I think having 4 posts a week for a project subreddit is a very bullish indicator in its own sense. Hope that makes sense to you guys. Just making sure. So today's Market Monday, and we can do a little bit of macro analysis for the markets in general. Now, the first thing I want to look at is the Fear and Greed Index for crypto. And damn, I really like these markers. It's a really good idea. Fear and Greed. These markers, you can refill them. Like, that's the best part. Fear and Greed Index for alternative.me. It's a neutral day at 50. And for CoinMarketCap, it is a neutral day as well, but at 43. So the market is what it is. It's neutral on the slightly closer to the fear side. This again has more to do, I think, with the whole Iran issue, Israel-Palestine, the whole conflict there. That thing. That is really not that large of a conflict. However, I think the fact that it's just so politically invested as like this micro proxy that it always has this capacity of like blowing up further, and this is constantly, I think, in the back of everyone's mind as like this like lit fuse. And by the way, bravo to the channelers for taking advantage of this moment. To really, indeed. Bravo to the channel for taking advantage of this moment to pass the play out. Aged out of the draft. Yeah, well, at a certain point you'll get used. Okay, so by the way, CPI numbers for the United States are coming out this week. So CPI numbers this week on Thursday. And overall, I think that, by the way, CPI numbers and like unemployment numbers, these are like the major macro trends they look for when they decide whether or not we're in a recession or whether inflation is too good or too bad. So we do have CPI numbers coming out on Thursday and PPI on Friday. PPI meaning producer price index. You can look at the calendar here and let's see. On Thursday, there's an expectation. Okay, the forecast here is 0.1. Previously it was 0.2. The jobless claim is this. I guess that's pretty close to normal. Not really yet. Nothing here too, I think, really noteworthy. I don't personally believe in the truth of these metrics as much as I believe in the truth of the people who believe in them. Does that make sense to you guys? What I mean by this is I don't believe that these metrics because you're taking like these large kind of non-fungible groups of actors. You're talking about like the job market in New York City, and you're comparing it to like the job market of like Cheyenne, Wyoming, or something like that, right? And every job in New York City and every job in Wyoming is kind of like ranked the same way. They're kind of commodified. And the fact of the matter is that I think being unemployed in New York City is way different than being unemployed in Wyoming. And I think being employed in Wyoming is way different than being employed in New York City. So when you kind of bundle them all together and you look at this percentage as a whole, I think that you have these underlying flaws in the math that it has to do with that word non-fungibility that kind of, I think, skews the relevance of the numbers. But I believe that the economists who make decisions about these numbers, they don't scrutinize these numbers. They don't scrutinize the flaws in them, as it were. So therefore, since they're the ones that make these gigantic macro decisions based on these numbers, and by the way, I do believe that they do scrutinize them deeper than I'm claiming. I believe that that they're going to make their decisions in a way that reflects these trends. Does that make sense to you guys? Does it? Yeah, you can zoom me back in. Okay. All right. Thank you guys so much for that robust amount of response. So anyways, the U.S. job market is surprisingly robust. This is like a narrative now, and that is again another metric that I kind of like don't take at surface level. Like I perfuncto heuristically dismiss it, to be clear. Like, so if we look here, not here. Okay, so right here, the U.S. job market is surprisingly robust. This is by Axios, and right here, they're talking about this blowout. They talk about a blowout job report, right? And those are excellent implications for September that point to the U.S. market remaining resilient and throws The employers added 254,000 jobs last month, the Labor Department has said, as also revised up by August and July numbers by a combined 72,000. So, like, first of all, the fact that you can revise these numbers in the past is always, like, I think a bit of a gigantic indication of how flawed they are. Does that make sense? Because I think that, you know, people were worried about a downtrend. Then what they did is they revised them up and they completely changed the trend. Does that make sense? So I don't know why that, like, this proves that you can't revise it back down later, like for next month. Does that make sense to you guys? As of 8:29 a.m. Friday, average job creation over the previous 3 months was a lackluster 116,000. The release of the September number and revisions bumped that to a robust 186,000. So, like, really, it's a spike in job creation, but they're kind of implying that this is the average over the last 4 months now. So the new job report also showed a dip in the unemployment rate to 4.1, back to its June level, following what had been an alarming spike in July. So I don't know if you guys get it, but like, this is just amazing number massaging. Do you guys know what number massaging is? So like, it's almost like they're kind of just beating around the bush of how inaccurate this type of like data collection is in the first place. And then like they're allowing this inaccurate data to just kind of like swing into a trend one way or another. Like just from the stuff about this, yeah, literally that, Doc. But then also, it's also like the rate, yeah. So like, yeah, it's like when you correct to how do I describe it? It's like saying if somebody only overdoses, yeah. If somebody only overdoses like once a month, they still spend 29 days of the month sober. Do you get what I'm saying? Do you guys get what I'm saying? Like, if somebody overdoses like, you know, once a month and they end up in the fucking hospital over it, right? And they think their stomach pumped. It's still like they can mostly say that they're mostly sober living. Do you guys get what I'm saying? It's like that type of, yeah, exactly. That's literally it, Jared. Yeah. So, yeah, what appeared to be a summer slump now looks more ambiguous and possibly just a head fake. Like, so what they're doing is that, yeah, exactly. They're creating the idea that, like, hey, guys, that worrying summer of jobs we had, not only is that now in the past, now it was also wrong. It's like, then what was the point of worrying? Would you guys get it? right? It's like, hey guys, it turns out that like, hey, the narrative from before, it turns out it was using wrong numbers. Yeah. Anyways, moving on, right? Moving on. So between the lines, what they're saying, the labor market has plenty of room to run, unemployment is not too high, blah 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 blah. And again, that's it. However, like again, they're at least implying the market is getting better. I'm assuming that has to be the case if they did a 50 basis point cut. There is likely more cuts to come, or so they're forecasting. This is the blowout jobs. We're going to talk about that. Okay, so there's also earnings season next week, right? Inflation update and the start of Q3 earnings. Okay, so a turbulent 5 days of markets, blah, 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 blah. Capped off by a better than expected September jobs report. So they're going to keep like referencing this, that helped stocks close marginally up on the week. So it's almost like they're talking about nothing here. Yeah, the CPI report will headline an economic calendar that also feature updates on consumer and sentiment, blah, 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 blah. Okay, a small step forward, the September jobs report again cooled concerns. Data from the Bureau of Labor Statistics, again, they're talking about the exact same thing again. So meanwhile, the unemployment rate fell from 4.2, fell to 4.1 from 4.2 in August. So they brought unemployment down by a total of 0.1%. Even from 4.2 to 4.1, that's not huge. That's like 5%. Does that make sense to you guys? That's like a 5% drop. Wall Street economists and strategists argued likely takes another 0.5 percentage point interest rate cut from the Fed in November off the table. So we think that the rate descent should continue, but with today's strong data, it's more likely the Fed will move in 25 basis point cut increments. Whatever. Yeah. So now they have this forecast here. These are the basis point forecasts. Again, there's a 2% target about inflation. Whatever. They push in a Tesla mention here, which is probably paid shilling. Okay, here they talk about the calendar again. Wednesday they have some here. Thursday they have economic data, CPI. Friday they have PPI data. Okay, moving on. So there's also this, the stock market today. Dow futures slip with stocks in retreat as investors rethink rate cut bets. This right here, it's the ultimate minute. Did you guys want to zone in for a second? Okay, you guys can do that while I just talk about this, because this arguably is just going over the same stuff again. Stocks soared to close the week, but the futures went down. And it's like, okay, this has something to do with the CPI numbers. Right here, you can look at the actual like trend, but I don't think this fucking matters. And that's over. So right here, here's another thing to talk about. This is actually more interesting because the 3 biggest themes investors are watching for as earnings season kicks off. So do you guys understand Q4 is like earnings season? Roughly earnings season, right? And this is really where a lot of the larger corporations are going to give earnings reports out. They all do it in Q4, kind of like aligned with the Gregorian calendar, if you will. And this effectively helps people make their decisions at the end of the year, etc., etc. Okay. Here they have a video about Silicon Valley Bank. Kind of don't care about that. But let's see. Okay. So the 3 biggest themes investors are watching for as earnings season kicks off. 3 biggest themes, right? And the first one right here is a great theme for us to talk about in DeFi. Yeah, I know. It feels like it, right? Silicon Valley Bank. Well, now they're making it a how Twitter panic took down Silicon Valley Bank. Like, this is the video right here. I couldn't agree more that Twitter panic is capable of doing that. Do you get what I'm saying? Yeah, well, you know, if you think about, like, how Twitter panic can affect the price of crypto and stuff like that, you guys know what I mean? So, yeah, like, Twitter being able to just panic the way it does absolutely has the ability to cause these things. Anyways, so key themes to watch for include AI adoption, consumer health, and the impact of lower interest rates. So to be clear, when they talk about consumer health, what do you guys think they're talking about? Yep. Natural flow of info through animate actions, 100%, and it just turns into bite-sized pieces of emotion, and the things that drive the most emotion are going to viralize the most. It's just going to be humans react to energy. Even if people are like, if you post people like, oh hey, hello Amelia Freed on Kick, thank you so much for tuning in. If you think about like, you know, the type of content posted on Twitter, very, very little of it is like, hey, this is really good data, and it's like a great like thread of somebody looking at spreadsheets, and it's a lot of stuff that's more about just people kind of like, yeah, they're just putting energy out in the system, you know what I mean? And people are very, very pain averse, so any type of idea, any type of panic. Michael J. Saylor is typing. Thanks, Michael Saylor. I appreciate you tuning into the PYRESWAP show. Okay, so AI adoption. We've also got consumer health, which, by the way, is not physical health, but it's like really more like credit. And then the third one is rate cuts. Okay, so I don't need to talk about rate cuts anymore, do I? Right? Does everybody understand what the fuck this is? Like, are we good on talking about rate cuts? Does anybody have any questions about how rate cuts work? I think we talk so much about the Fed. Yeah, on Monday. We don't need to talk about it every Monday. But yeah, rate cuts. It's crazy that there's probably journalists out there making a full-time living, and all they do is they just talk about rate cuts. Consumer credit is basically how much people are paying their credit cards off. Does that make sense? Like, so the rate of default, like the rate of risk, and like the rate of payment. Stuff like this. I guess the rate of payment wouldn't be called a thing, but they would probably use a different word that's in one of these textbooks here. But yeah, like the default risk and things like that. These are the metrics they lose at with consumer credit, because consumer credit matters a lot when we get into Q4 because of holidays, right? So people's ability to buy gifts in the winter, this is like something that stimulates the economy. Does that make sense to you guys? But I want to talk about this theme right here, AI adoption as a theme. And I like that they call it a theme, by the way. What it shows you is how narrative-driven markets are even outside of Web3. The AI adoption theme. So, blah, 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 blah. This is about growth, PepsiCo, and the banks. Okay, AI adoption. So, in addition to the actual earnings figures, investors will be monitoring key themes as company executives offer guidance during earnings calls. Here are the big things Wall Street will be watching for. AI adoption. There is growing concern that the massive investments being made in AI infrastructure won't actually pay off in the form of higher revenues and profits. Growing concern. Do you guys see that? There's almost like a prisoner's dilemma. I obviously keyed in on this because they called it a prisoner's dilemma. Prisoner's dilemma is game theory, so I like that it's saying that. Prisoner's dilemma. And actually, the prisoner's dilemma isn't even like... Prisoner's dilemma isn't even about being forced, but they call it a prisoner's dilemma. Companies feel like they're being forced. Yeah. I guess if I'm screen sharing, there's no point in writing this on the board, right? Okay. Okay. I'm just going to fucking use my gigantic purple mouse here. Okay. I'm going to use the highlight. It shows like class notes. You're not wrong. Well, I'm going to highlight here too. There's almost like a prisoner's dilemma in the market right now. Yeah. And companies are feeling like they're being forced to invest. Companies are feeling like they're being forced to invest hand over fist in AI technology despite lack of revenues being generated. Gabelli Funds Managing Director John Belton told Business Insider. Well, I don't think SBF and Diddy, like that's not really like a Market Mondays thing. That's really more like that's like a meme. Yeah, that's more like, oh yeah, like a meme news. That's not really going to affect the macro. Yeah, it's just like, hey, they're at the same prison, but that doesn't even really mean anything. Yeah. Oh, not even that. Prisoner's dilemma. Yeah, and we can pull that up. Prison's Dilemma is a game theory concept that describes a situation where two or more people have competing interests and choose a suboptimal outcome. Oh, yeah, I got it. Okay, fantastic. Yeah. Yep. Anyways, going back to this. If tech companies signal they're cutting spending on AI, it can lead to a major unwinding of the current tech boom. Does that make sense to you guys? Like, this is how fucking weird it is. If tech companies signal they're cutting spending on AI investments, it could lead to a major unwinding of the current tech boom. So investors will be looking for clues as to how companies are progressing in monetizing their AI investments. Investors. If tech companies signal that they're cutting spending on AI investments, it could lead to a major unwinding of the current tech boom. So investors will be looking for clues as to how companies are progressing in monetizing their AI investments. Do you guys know how they're doing this? Yeah, like arguably, like every way that I see this happening, I think is like terrible. There's also the question of sectors other than tech where AI may be having an impact. A big driver of future growth is going to hinge on how the applications of AI will be broadening out into other sectors such as healthcare, industrials, and aerospace and defense. You're not wrong, CJ, but then, but this could go both directions. So I think FOMO tends to like bring it upwards, but I know what you're saying. Adrenaline will start outweighing the positive speculation, right? Or if there's just any type of bad news, okay? So the fact of the matter is they have to create these weird information gates where they can't say anything bearish about AI as they're investing into it. There's another concept called the sunk cost fallacy. Are you guys familiar with this? You guys know about sunk cost fallacy? Sunk cost fallacy, well, hilarious. Well, sunk cost fallacy is also kind of what helps build a narrative and like a way people view things. A great example, and I'll pull this up on Wikipedia. Sunk costs, yeah. In economics and business decision making, a sunk cost, also known as a retrospective, cost has already been incurred and cannot be recovered. Sunk costs are contrasted with prospective costs, which are future costs. A sunk cost is a sum paid in the past is no longer relevant, but the fact of the matter is that the bygones principle, people don't like creating like expected utility theories on a process property known as cancellation, which is rational decision making to disregard any state of the world that yields the same outcome regardless of one's choice, right? But the fact of the matter is that people tend to, the fallacy effect, this is the first part, the bygones does not always accord. Real world, sunk costs often influence people's decisions, with people believing that investments justify further expenditures. Does that make sense? So people demonstrate a greater tendency to continue an endeavor once an investment in money, effort, or time has been made. Does that make sense? I mean, I'm not going to comment on that. But, yeah, people can remain in failing relationships because they've already invested too much to leave. Do you guys get what I'm saying? So that's what Doc's saying there about you've invested too much to leave. But other people are swayed in arguments that war must continue because lives will have been sacrificed in vain unless victory is achieved. Does that make sense? Individuals caught in psychological manipulative scams will continue investing time, money, and emotional energy despite doubts or suspicion that something's not right. That's very Web3 related. Would you guys not agree? These types of behavior do not seem to accord with rational choice theory and also are classified as behavioral errors. They're not really fucking irrational, in my opinion. To be honest, they are irrational, but the fact of the matter is that like irrational behavior is sometimes more effective than rational behavior. Yeah, this is literally it, Pega, yeah. But the fact of the matter is, like, Pega, think about this, Pega. We're launching PYRESWAP right now, and this has costed money. Does that make sense to you guys? Like, right now, if I look at everything that's been done so far, and I think that we're not nearly at the threshold of our success that we need to be at, it would say, like, me continuing to do the PYRESWAP show is the sunk cost fallacy. Does that make sense? Like, me spending time doing this. But really the fact of the matter is that, like, there does create this inflection point where after you've done all that, it makes everything you've invested in the past go back to being profitable. Do you get what I'm saying? Yeah. Oh, yeah, for sure. But, like, the upside of when it comes to succeed, like this is where this is why you have sunk cost fallacy in the first place. Yeah. So like they talk about it being like this is irrational behavior, but the fact of the matter is you're not always gonna see something as a benefit the first time you buy it. Do you get what I'm saying? Like you have to effectively go through this period of like learning what you're doing wrong. So I'm not trying to even argue for sunk cost fallacy because there's times where it is abusive, like in the way where they make wars last longer and stuff like that. But yeah, now you guys at least understand the AI has this sunk cost fallacy concept where like if they stop investing money in AI, once the application, by the way, Web3 has the same problem, and by the way, it works with the same concept that like, right, if we quote Vitalik like this, right, the purpose of smart chains is dApps. Right, and then we say this is a Vitalik quote. This is basically paraphrasing him, right? And then basically speaking, if nobody knows how to fucking build dApps, they're still going to continue. Like putting money into this and around it until like a dApp appears, almost like as a chaotic manifestation. Does that make sense to you guys? It's like, well, we know that it'll eventually happen. They now have proof of it happening. Does that make sense? Like they built Uniswap, which was arguably like the first dApp. Uniswap and Lido staked Ether, right? So like, okay, well they are in fact possible, but like as far as the design principles and the fundamentals, yeah, CJ, yep, that is basically it. Because right now, this is an MIT economist saying a lot of money is going to get wasted. MIT economist sounds the alarm on AI hype. I want you to know something though. Economists are not always right. Do you guys get what I'm saying? Because Paul Krugman once said, the internet will have the same impact as the fax machine. Right? So yeah, a guy named Paul Krugman, who is he won the Nobel even though I probably don't agree with him on very much. I'm gonna agree with a bunch, but he literally believed that the internet will have the same impact as the fax machine. Now the fact of the matter is that when AI actually gets good at solving problems, and this arguably means when AI stops getting designed by engineers and starts getting designed by the people who actually need it to do a job, it'll actually get really good at like. Well, Pega, correct. Pega, but like, you gotta understand, think about the guy, okay, Pega says, if you know it'll eventually succeed, then it's not sunk cost fallacy. Well, there was a guy who just sold Pyre Phantom, right? And it's like, what did he not know, right? Did he need the money to put elsewhere? Was he an active trader and he wanted to move it into Bitcoin? He wanted to go chase a meme coin? He wanted to go, buy something else, right? Just like find a way to trade daily, as it were, as opposed to like waiting for volume or candlesticks to come, right? He just wants to trade a more active chart. Our goal here is to make it more active chart either. So the fact of the matter is that that person arguably like took it as sunk cost and exited, right? And they brought Pyre Phantom down to like you know, there was like a 17% drop and now it's like 11%, whatever. The chart continues to like show and resist this downtrend. Like actually we want to go up. But the fact of the matter is that, you know, everybody has a different preference and a different understanding of how it works. So like, you know, that person, they clearly didn't understand enough about PYRESWAP. They didn't read the docs, or they didn't necessarily watch enough videos. So they chose to consider it like sunk cost fallacy because they have no idea what they're talking about in the first place. Do you get what I'm saying? Yeah. And that really depends on information, like whether or not you have information, right? Or yeah, like so if they don't have the right information, you know, we in PYRESWAP, we're doing like a paradigm shifting project. So the old paradigm, when brought into this project, continues to fail. Like it just, yeah, you're like whatever your expectations are, PYRESWAP will like refute those, right? And the thing is, like, it's one of the easiest charts to trade, but people still don't understand that either. You know. Anyways, This becomes more apparent, I think, when we have a larger user base, deeper liquidity, and of course, post-Genesis. But anyways, so AI will eventually be good. You know what I mean? Like, it'll eventually be good. But right now, it's just trash. Does that make sense? I don't even think right now that AI needs to have this much GPU behind it. I think AI needs to go back to the design board because there is something about the way AI gets smarter that isn't actually smarter. Does that make sense? In my opinion, the way AI learns is not optimal. That is my opinion. Like, if you actually change the way they learn and kind of made that more rigid, or should I say rigorous, not even decentralized, yeah. Not even decentralized, yeah. Like I would say rigorous. The Zero Kex, the way that they learn right now is literally almost from popularity. Does that make sense? Like, so they're learning right now, they're copying a search engine. Does that make sense? Like, they're basically saying, hey, make AI learn the same way a search engine learns. This is not the way AI should learn. That's not the way an LLM should learn. Because, like, all they're doing is they're just correcting to what they find, and they're not, like, verifying what they find. They just know they're finding in other places. There was this example of an AI telling people that they can use Elmer's glue on pizza. Did you guys know this? Like, an AI was, like, saying, hey, a great way to make the cheese stick to pizza is to glue it down. And this was somebody trolling on Reddit from, like, 17 years ago, and the AI just referenced it like it was gospel truth. And this is the wrong way for an AI to read the internet. Yeah, so, like, they don't actually know how to scrutinize what they're learning, and that's a problem there. So the AI is not being taught to learn rigorously. It's being taught to learn by what is popular or what the search engine brings it. And this is, again, like, search engines aren't correct, they're just popular. And this is, again, if you're not differentiating popularity from accuracy, you're kind of fucked. So anyways, this MIT economist sounds the alarm on AI hype. We can take a look at this. AI infrastructure investments may not meet investor profit expectations. So only 5% of jobs are likely to be significantly impacted by AI, according to The Economist. A lot of money is going to get wasted. And this guy's named Darren Acemoglu. I have no idea who that is. Okay, a bulk of hundreds of billions of dollars being poured into AI could go up in smoke. So Darren Acemoglu, who told Bloomberg in an interview that the hype surrounding AI may not meet its lofty expectations. Acemoglu estimates only 5% of jobs are ripe for being taken over in the next decade. Possibly. Yeah. I definitely think that, like, there is still room for artists because AI, there's certain types of art that AI can't do. Yeah. Cloud hyperscalers like Microsoft, Amazon, and Meta will not lead to a corresponding revenue surge. I kind of agree because most of the time now, people aren't even, like, using the AI. Do you guys know what I mean? Like, you see AI getting jammed into, like, Google's top section, and people kind of scroll past it most of the time. They're like, you know what? I don't even know if I want this. I'm going to go find an actual result. Do you guys actually use that? When you guys use search engines right now, do you, like, believe the AI at the top, or do you go down to the results? That's a real question. Yeah, exactly. So CJ prefers results. Yeah. So you're just numb, immediately numb to the AI. Yep. Okay, so, like, literally. Yeah. I think I'll read the AI and then go to the results. Like, let me see if that's actually true. Like, I verify the AI. Like, I just don't believe the AI. So Charlotte says in a hurry. Zero Kex says he avoids it completely. CJ says you misread. Oh, you use the AI more than the results. Oh, okay. Javery prefers, I guess, the results. Yeah, is that what Javery's saying? Bell no. Okay. Well, yeah. I mean, good luck to you, CJ. That's all I gotta say there. Yeah. Again, most people still, they see that and they're not immediately convinced that this is like. Yeah. I know what you meant, Javery, but I didn't know if you were saying hell no to results or hell no to AI, because it just seems like I don't want this, and I think it's like I think the AI is misunderstanding me. I think the AI is like giving me the wrong answer. Like, the level of confidence in AI is just low. Charlotte, but the AI, yeah. I guess to each their own. Yeah. Okay. Anyways, that's all in on AI. The last thing I wanted to cover today was actually called the debasement trade. But actually, let me finish this Business Insider article. So the AI frenzy continues to 2025, and ultimately leads to a crash in tech stocks. This is literally what this guy says. So there could be an AI bubble. Do you guys see this right here? Yeah. AI hype cools and some applications of technology take hold. I like this article a lot, by the way. The AI frenzy ultimately leads to a crash in tech stocks. Yeah, correct, ZeroKex, because the ones that you're describing, those are the ones that are actually going to solve people's problems. Yeah, like those are the ones that people need. We don't even need LLMs. We need SLMs, small language models. Like small language models are the ones that people need. These LLMs, like they're so general, they're useless. Yeah. Like they know so much information that they fucking contradict each other. They contradict themselves. Yeah, no, yeah, SLM, not LLM, in my opinion. Anyways, topic for another day. Okay, the AI frenzy lasts for many more years, leading to companies replacing human jobs with AI technologies without understanding what they're going to do with it. Technology companies will scramble to rehire workers when they eventually realize technology doesn't work. So this is the three scenarios. You guys see this right here? AI hype cools and some applications take hold. Would you guys agree? The AI frenzy continues into 2025. Ultimately leads to a crash. So you have the AI bubble. AI spring followed by AI winter. The AI frenzy lasts for many more years, and then apparently now this is like the tech doesn't work, or like it costs too much. Yeah. Do you guys know that the energy cost of a human brain is like 50 watts? It's like a fucking light bulb. So like, sorry, it's like five or 10 light bulbs at best. Actually, let me look that up. Yeah. What is the wattage of a human brain? 12 watts. I apologize. Yeah, it's 12 watts. There you go. This is from Princeton. So like when you think about like what it takes to run these fucking LLMs. Yeah, what it takes to run these LLMs, it's gigawatts. You guys know what I mean? No, Charlotte, they're not all the same. Human brains, no. But the fact of the matter is like if you think about like what the energy consumption is, at a certain point, the human brain becomes like at some point the human brain becomes a better caloric ROI, unless you can get like shit tons of whatever. Yeah. Anyways, the AI frenzy lasts for many more years. Asimov is a combination of second and third scenarios. So he sees that these are the most likely. 2 and 3 are the most likely. When the hype is intensified, the fall is likely to be soft. So they can do that in a few places with some human supervised oversight like coding, but in most places they cannot. So basically, AI literally apparently still needs shit tons of oversight. Make sense to you guys? Which is fine. Like arguably, the fact that it needs oversight still, in fact, requires a need for humans. So it just seems that more humans are going to need to learn how to oversee AIs as opposed to worry about getting replaced by them. So anyways, why the debasement trade lifting Bitcoin and gold may continue, says JP Morgan. So in case you guys are wondering, JP Morgan believes that gold and Bitcoin are going up because of the dollar debasing. Were you guys aware of this? Okay. The alternatives to the dollar haven't responded well to the latest Iran-Israel fighting. So they're kind of up, they're kind of down. But gold has recently been recording record highs. So blah, blah, blah. Gold has gone well beyond the moves implied by dollar and real bond yield shifts. Instead, it's been driven by what's called the debasement trade. So the debasement trade is a term that reflects a combination of gold demand factors, which in our client conversations range from structurally higher geopolitical uncertainty since 2022. So geopolitical uncertainty drives gold up. To persistent high uncertainty, but inflation backdrop. And then, of course, the government debts across major economies. So, by the way, the government can't debase gold from their debt. Does that make sense to you guys? These are all views, it should be said, that have been expressed for years, but gold around 2,700 an ounce and Bitcoin around 60,000 give them new currency, so to speak. Do you guys get it? Yeah, that's a joke. Do you guys get that? Do you guys get that joke? Yeah, that's correct. Yeah, you're correct. Yeah, it would be higher. It would be higher. It needs to be 79,000. The true all-time high is 79,000. We can look at that right now, actually. Yeah. Yeah. Not this one. Here you go. Is it this one? Yeah, okay. So if in 2021 I purchased an item for $69,000, in 2024 that item would be 80,000. Okay, so yeah, the true inflation adjusted new all-time high would need to be $80,100, 159. Do you guys see that? Does everybody see my screen? This is according to usinflationcalculator.com. I imagine this is the type of figure that's argued, but who cares? Everybody get it? Okay. So anyways, these are all views, but they have new currency. Does that make sense? So these things being near highs, Bitcoin being around 60,000, they agree that 60,000 is an all-time high either way. Does that make sense? You could determine, by the way, let's say, what was gold's price in 2021? Gold price in 2021. Yeah, the daily gold price of 2021 is available. Thank you for it being available. Okay, the gold price started the year and ended the year around 1840. So let's say it's 1840. Let's assume they're even correct here. That's AI, by the way. Let's see what 1840. Let's see if this is 1840. Yeah, it looks like it. Looks like they got it right. Okay, so if I did 1840. Okay, so gold, yeah. So gold, by the way, has definitely exceeded its previous all-time high, inflation adjusted. Do you guys see that? Because now gold apparently is trading here at 2,700. Do you guys see this right here? You guys paying attention? Fantastic. Thanks so much, Charlotte. I love a good yes in chat. It really makes me feel like I'm talking to people. Thank you so much. Okay. So by the way, this is the share of U.S. dollar in reserves as reported by this. Oh well. The share of the dollar in currency reserves is falling. Do you guys understand what that means? It means that like in the currency reserves held foreignly, exotically, like compared to the United States, they're holding less and less of the dollar. So this right here was apparently in 1999 that 70% of foreign currency reserves was the US dollar. And then it went all the way down. I think in the first 10 years there, it dropped all the way to like 65%. And now it's dropping to 55%. It's not a huge drop. This is going from like 72 to like 57. Does that make sense to you guys? But they're just showing you the fucking data. Yeah, it is a trend, exactly. So anyways, this right here is what? Okay, I'm not gonna say that. But the JP Morgan team, they use some fancy math to show in euro terms that gold has appreciated more. Yeah, there you go. Gold has appreciated more. We just saw that as well. Than what would have been expected by changes in the inflation-adjusted 10-year yield. From here, they say there's little doubt the pace of central bank purchases is key to gauging the future trajectory for gold prices. Make sense? Okay. Okay. This is, by the way, mentions Bitcoin and Ethereum here. The JP Morgan team also looked at speculative demand from institutional investors by examining U.S. commodity futures trading commission data. They find a bullish impulse in gold and Bitcoin futures, but not in Ethereum futures. Do you guys see that? To us, this suggests that speculative institutional investors, such as hedge funds, might see gold and Bitcoin as similar assets, both as beneficiaries of the so-called debasement trade, but not in Ethereum. In addition, the fact that Bitcoin ETFs started seeing inflows again in September after an outflow in August suggests that retail investors might also see gold and Bitcoin in similar fashion, they say. This debasement trade may have legs, they say, boosted by rising geopolitical tensions in the U.S. election. Okay. Anyways, there you go. You know, eventually they'll have Bitcoin in this risk sentiment gauge stuff. Anyways, okay. The buzz, blah, 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 blah. Okay. That right there is all of Market Monday. But of course, we can now talk about other things. We can talk about our price charts. Let's give it a little refresh. Oh, I gotta verify I'm a human. Hang on. Okay, so overall flat, at least over 24 hours for, well, this one here took a whatever. This is the 1 minute chart on PYRESWAP. It is, in theory, again, if you have these little tapering trends, like these right here are these, let me zoom in for you guys. If you have this little fucking moon, this moonish surge, and you have this little tapering trend of consolidation, this right here, this might be possibly like the level of inflation, but the fact of the matter is that like the incantation witch fault by itself will end up putting this sort of net buy pressure. Does that make sense to you guys? On PYRESWAP, it's going to be a little bit harder to see. We only have like 2,600 liquidity over here. Yeah, exactly. So you'll do see these little velvet ropes, kind of. Yeah, 1 o'clock right here. It dips. But you know what? It's hard. It's still just hard to see here on PYRESWAP because some of these, sometimes it's here kind of like creating. It's kind of like creating itself. Yeah, anyways, let me go back to the watch list. PYRBNB, also it shows that kind of up, kind of down, but it's kind of showing the exact same thing right here. Right, so 7 o'clock right here, I guess that's the latest one on PYRBNB. This right here is probably it as well. It's very zoomed in, but yeah, here's a 1 o'clock. Here's a true velvet rope pattern. Well, kind of. Kind of, yeah. Anyways, right here, by the way, this is the Pyre Phantom chart. Now, you guys see, if we're looking at the 1 minute chart, it looks like this, right? Yeah, I agree, ZeroKex. I agree. Right now, you see these two red trends, and this was like one or two guys, right? But you can still see that the trend kind of doesn't give a shit about this. Like, the trend itself, whether it's in this lull because of volume or World War III or whatever, right? Somebody might always be bearish because of World War III. The trend is still right there. What it takes for us to see these weird surges of mooning are these weird kind of like, I guess you could describe it as like a perfect storm event of when fucking volume spikes. Does that make sense? So you'll see a spike of volume, and then eventually, the spike of volume will kind of auto-catalyze into more volume. Does that make sense to you guys? Because like the thing itself will kind of... Imagine if like an allegory would be like, what if you could skip a stone and it would bounce off the walls and then keep skipping? Does that make sense to you guys? Anyways, yeah. So this right here, if you kind of like crunch these days in and you go back to like the 1st of October here, this is now the 2nd week of this. Like arguably, it's like, okay, we still kind of maintained the same trend, even though I guess somebody bought and took a loss here. Yeah, we're not done, but I guess yeah, somebody else got sad about it. Oh well. Back to business as usual. The chart will continue to kind of deflate. Yeah. If you learn the fuck, man. If you want to understand what's going to happen next, do you guys understand? Like, if you can learn this, you're not going to be surprised. Does that make sense? The fact of the matter is that people not learning this is why they're surprised. Making sense to you guys? Yeah. This dashboard is correct most of the time. Like, most of the time, 75%, 80%, 90% of the time, it's correct. Like, at least in my fucking studying of it. Yeah, like not like 51% of the time, but higher than 51%. Okay? So like whenever you see something happen like that and the PPESD doesn't account for it, what it really just implies is that somebody else does not understand the PPSD and their loss can be your gain. Does that make sense to you guys? The PPESD right now, we're inflating smaller than ever. We are still quite net deflationary, but this just might not be apparent to everybody. Our marketing work continues. Our marketing work continues, and that involves AGAs, and we're getting better and closer to both of them by the day. We're getting better and closer to both of them by the day. I think today is going to be super productive. I can just feel it. I think today's going to be very productive, and I'm excited about it. And if you guys have any questions, you can DM me. And I want to thank everybody for being so consistent. And we're going to make it. And yeah, we're going to change DeFi. Yeah, why wouldn't we? Anyways, yeah, does anyone have any questions? Because I can just wrap it here. We're a little short. We're still early, but like I feel like everything was of value today, and I had good energy. And I feel like based on the amount of questions I'm getting, I feel like you guys are good too. Yeah. Anybody have any concerns or anxiety or like? By the way, guys, I want to actually know. I do want to talk about something. We are not in this business. Okay. When it comes to doing marketing, we do marketing for marketing. Does that make sense? Marketing for marketing. This is in contrast to development for marketing. Does that make sense? Because development for marketing is not marketing. Development for marketing is development. Does that make sense to you guys? Do you guys understand what I'm saying here? I want to at least explain to you guys what this means. A lot of people bring these ideas to me, okay? And I don't hate the fact that people bring me ideas. Here's a couple things about this. Most of their ideas is just stuff that they see elsewhere in Web3. Does that make sense? Now, everything you're seeing in Web3 has this type of survivorship bias. Does that make sense? So a couple things people have talked about have been involved in like airdrop campaigns, a mobile game, partnerships with other dexes, right? Or things like that, or like cross farming. These have been talked about for the last month or two, right? The fact of the matter is that every single thing that we're doing here, we're still gonna only have the same eyeballs we have now. Does that make sense? So it's not the fact that we're airdrop, like we can create an airdrop campaign. It's the fact that as soon as we build one, or as soon as we build a mobile app, or as soon as we build a, or as soon as we create a meme coin farm, we then have to market that. You actually have to do the eyeball gathering work. Does that make sense? So the fact of the matter is that we already have stuff built that isn't getting marketed. We don't need to build new stuff, which then creates more of an onus for us to market that. Marketing work is not development. Yeah, like marketing work is just continually doing these small things that nobody notices, because what they notice are these big bombastic events that they think is marketing. But that's marketing as the layman views it. Does that make sense? Like marketing behind the scenes is a whole bunch of things that people would not understand. Does that make sense? But you're just doing the same repeated things again and again and again that help the end user travel down your funnel. Additionally, when it comes to marketing, I'll talk about this. Doing development for marketing, we could do an airdrop campaign right now. We could do a Zelia campaign right now. We could build a mobile app. We would still be in the same fucking place. Oh, launching Ribs Money. People ask, like, could we launch Ribs Money? Maybe that'll do it. No, it won't do it. It won't do it. Launching another project will not do the marketing. We have to do the marketing. Like, I think that because the marketing made a shift and it's so nebulous, and I think most people don't understand, like, marketing outside of Web3. They think about what they see succeeding, but what they don't see is all the people attempting to copycat that, and then fucking fail at it. Do you guys understand what I'm saying? Do you guys get it? Survivorship bias. When it comes to marketing, you have this funnel, right? You have this concept of a funnel, right? Does everyone understand the funnel by now? I'm not even gonna label it. Zero Kex, you're completely correct. And the thing is, people don't think about the other 99. They don't see the other 99. Exactly. So we actually focus on the 99. In fact, I told people about the Reddit strategy that we should not expect to see anything until we've done it 100 times. Yeah, like we need to do it 100 times before we expect to see anything. Like other than that, we get the KPI that we get. Yeah, like marketing is fucking hard. Marketing is fucking hard. Like it's so theoretical. The fact of the matter is that you make it annoying on purpose because you have these tiers here, right? You have awareness, right? You have the awareness. Right? We're just going to call it aware. But the fact of the matter is, there's always this larger group, by the way, that become aware and they become turned off. Does that make sense? So the fact of the matter is, people, like, let's put it this way. Our marketing strategy is not for the goal of making the majority of the eyeballs like it. Does that make sense? Like, we have zero interest in, like, let's say we posted on Reddit and we got 20,000 views on a post. We do not expect those 20,000 people to be majority turned on, like interested. Does that make sense? We expect the majority of them to be disinterested and in fact disgusted, or in fact they just reject it. Does that make sense? They ignore it, they reject it, they dismiss it. Like that is expected. So you always have this larger group that is rejecting your message and saying no to you. You don't care about that. You just keep doing it. Yeah. Yeah, but the thing is, 0x, you've got to just increase the quantity of your awareness generation. Yeah, the only way to do this is increase the quantity of awareness generation and not worry about like, oh, this will come off shilly. Yeah, but those people, we were never going to get them in the first place. Does that make sense? Like, oh, they're going to reject your message. Well, they haven't even heard my message yet. Do you guys understand what I'm saying? So you can't be worried about like, oh, they're going to reject your message. They haven't even heard it yet. So if they haven't even heard it yet, we don't even have them, right? Like, it's like, what if they say no? But what if they say yes? Does that make sense? Most sales and most marketing, it doesn't close above 50%. It closes in the minority. But the fact of the matter is millions and millions of dollars, billions even, are done through sales and marketing that have less than 50% close ratios. Does that make sense to you guys? Like, you shoot your shot regardless. So like, you just repeat this again and again and again, and this small fraction of people that get turned on, that's what ends up filling your awareness section. That's what ends up filling your consideration section. Does that make sense? So like, we're not interested in this. Thank you, Jeffrey. Yeah. Why would you even need a pen though? Yeah, give me a reason why you would use a pen. Yeah, maybe a pen's not for you. When's the last time you used a pen? Yeah, I was in fact trained on this. Yeah, you disqualify them and then make them tell a story about how they use the pen. And they're like, oh, okay, a marker? Yeah, it's like, okay, yeah, Jeffrey, I'm asking you. When was the last time you used the pen? You might not even need a pen. Just now? Okay, so you'll probably need them in the future then, huh? Yeah, right. And would you say you're working next week as well? Yeah. Anyways, I'm not going to do sales training right now. Maybe one day I can do sales training on camera. But until then, yeah, you're always going to have a bunch of people who say no to the fucking pen. Right? But then again, all we've determined is that having pens is a necessity for Jabri. So, yeah. So, Jabri, would you agree that owning a pen is a necessity for you? Yeah, so now Jabri has now sold himself on the pen. Yeah, have you ever seen those like, sell me this pen? Disqualify them, ask them to tell you when the last time they used one was. It's like, do you see yourself doing that in the future? It's like, yes. It's like, so would you agree that a pen is having a necessity? You're like, yes, okay. The pen is this much. Yeah, it will solve your problem. Yeah, it's about diagnosing them and like finding out if they actually need it. You know, when you get pushy with sales, you get bad. The idea is to get pulley with sales. This is another fucking topic later. Marketing. Turned off. You're going to have the majority of being turned off. Does that make sense? Like, you cannot upwards facing palm. Exactly that. Yeah. Not downwards facing palm, but upwards facing palm. Yeah. When's the last time you even use one of these? Turned off. They're going to be turned off. You don't worry about this rejection. Like, fuck them. Does that make sense? Like, fuck them. Like, that's, like, they had an opportunity to be a member of the first decentralized credit union in history, and they said no. I fucking wish they said yes. Like, it's on them. You know what I mean? But like, again, it's not like, oh no, they said no to us. I feel bad about it. No, I don't feel bad about it. It's like we just watched the guy sell Pyre Phantom because he didn't read the fucking docs. Maybe he lives in Israel and he's really gonna get nuked or whatever, so he's buying a bomb shelter. Who fucking knows what that guy's doing? Do you guys get what I'm saying? But it's okay. It's okay. Like, again, awareness generating activities. We do marketing for marketing. We do things daily that increase eyeballs, increase eyeball count, increase eyeball count. So the fact of the matter is, launching an airdrop campaign or launching a fucking mobile app or launching other things, they're not getting us new eyeballs. They just have this other thing that we now need to divide eyeballs into. I don't know if you guys know this, but the goal of like the GPSE is to have so many fucking communities that they're factionalized all over the place. Do you guys know what I mean? It's like a federation of communities. Do you guys get what I'm saying? Do you guys get what I'm saying? Yeah, like, so the fact of the matter is, all you can do, why do I obsess over this 300 number? Right? Because 300 is enough people. By the way, I'm talking about 300 like believers. Do you get what I'm saying? 300 believers. Because, oh, by the way, Naldo, I got great news for you later today. Great news for you later today, Naldo. I'm going to DM you. Why do I care about this? Because 300 actual believers is enough for word of mouth to begin doing the work. Does that make sense? When you have 300 users, yes, thank you, Electronic. This is Sparta, yes. But arguably, Electronic, this is a great way to describe this project because having 300 believers does allow you to fight armies way larger than you. Does that make sense? Yeah. So again, we already have a fraction of these true believers. We do. So it's not like, oh, we're not making progress. Where do these new people keep coming from? Like, if they invest the time in understanding how PYRESWAP and the GPSE works, you cannot pay them to become bearish. You cannot pay them to become bearish. So the real goal is like 300 people that could not be paid to get bearish. This is not impossible. We already have a significant fraction of this. I think we do, Javery. Yeah, I think we do. I don't even think we need Kool-Aid and Hopium. Like, legitimately, it would be about, let's generate so much awareness that we have 300 people that actually read the docs to completion. Does that make sense? If we could get 300 people to read the docs to completion, like, would be good. So by the way, our Reddit strategy, when our Reddit AGA finally gets tuned in, this can be tuned to 60,000 views daily. We can, in fact, for those of you guys in our Reddit or in our Reddit strategy server, we can, by the way, 60,000 views a day. And guess what? We're going to need it again for Ribs Money. And we're going to need it again for Affogato Finance. And we're going to need it for Hoggy Finance. Does that make sense to you guys? Yeah, like our Reddit AGA is not just for PYRESWAP. It's like for every single thing in the fucking future, we are constantly doing marketing. And when I mean marketing, we're doing marketing for marketing, not development for marketing. Web3 is so... Web3 is like the fraction of specialty. So much of it is development that developers end up doing more things. So you end up with development for marketing. But that doesn't mean that that's the play. That means that's the saturated play. Does that make sense? That's what's already kind of crowded out. Do you get what I'm saying? Do you understand what I'm saying? So the better thing to do is do marketing for marketing. And a lot of people don't realize what that means. But it involves like doing data and just continuing to get eyeball generation. Yeah. Like, you tune it a certain place, you have a strategy, you have numbers based on the strategy, you have a conversion rate at every fucking stage of the funnel. Oh, by the way, we have our TikTok strategy coming up too. But anyways, and then from there, more and more AGAs. Once I have these two AGAs running, I'll be able to make better tutorial videos, right? Because everybody's asking for more tutorial videos. There's no point in making better tutorial videos right now when we're not generating new eyeballs. Does that make sense to you guys? Right? It's like, oh, well, if we had these new videos, it's like, yeah, but like, we don't have new eyeballs right now anyway. We have to generate eyeballs and have them generating every day. Every day, new eyeballs. Every day, new eyeballs. Every day, new eyeballs. Our goal here is not being viable. Our goal here is being dominant. We're not going to dip our toe into marketing. We have to dominate at marketing. Does that make sense? Our goal is not being viable. We're not that kind of DApp. We are a mega DApp. Mega DApp, and we make mega moves. Are we clear? Robot chicken intro, people, to get more eyeballs. Oh, you mean like where you have the fucking A Clockwork Orange scene where you strap people into a chair or whatever? Yeah, like that's from A Clockwork Orange originally. Yeah. Yeah. That's from a movie with Malcolm, what's his face? Yeah, a Kubrick film, But yeah, so anyways, that's where the reference gets from. Hilarious. Anyways, yeah, but yeah, we're generating eyeballs every day. But yeah, again, Jabry, no, it's not about forcing them to watch. It's about getting them to watch. Yeah, it's not about forcing them to watch. It's about getting them to watch. Like, in leadership, okay, leadership is not about getting people to do what you want. It's about getting people to want to do what you want. Does that make sense? It's like, so everybody's incentive and their agenda, like their motivation, it has to align with what you're doing. Yeah, exactly. They will feel forced when they understand. Oh, you mean like they will feel attracted when they understand? Yeah, I get what you're saying. Yeah, compelled. Yeah, I think forced sounds like they're being coerced, like they're being like conscripted into it or whatever. Anyways, yeah, I get what you're saying though. Okay. Anyways, we can wrap it up today. Now, it is. But yeah, so like our marketing, yeah, it's not development for marketing. We don't need to build a new thing. We need to like market the thing we've already built. Like, we're just not doing that because that's not what's understood in Web3. All the stuff that's happening behind the scenes, as it were. When we have that happening, like in-house, as it were, when we have marketing happening in-house, hey, Jabry, you're getting better every day, okay? Keep up the good work, buddy. Your practice makes perfect. Yeah, when we actually start having our own in-house marketing, like automated and getting better every single fucking day, like then it makes sense to layer external stuff on top of that. Does that make sense? Okay. Anyways, we're going to wrap it up now. Thank you so much to my producer and everybody else. Have a great rest of your week. We'll see you tomorrow on the PYRESWAP show.